let's see what we got. Let's see what we got. All right, let's make sure I can see the screen. All right, we're good. All right, we are live. We are live. We are here. We are here. All right. So if you're seeing this not live, I gotta just explain a few things off the rip. Hey, what up, bro? What up? What up? But we're gonna watch these documentaries, right? So I'm gonna just shout out the channel off rip, Billionaire Bears. Shout out Billionaire Bears. And I linked all the information down below. And of course, I'm gonna have to pause it and add some commentary because you can't just rip off people's stuff, and I wouldn't do that anyways. And then also, I gotta remind you guys, I'm gonna be doing the weekend update and prediction this Sunday. So tomorrow, I'll be doing that tomorrow. Now, also, I want to ask you guys, should I leave the chat on or off of the screen? That is a question. I don't know what I should do. So let me know if I should leave the chat on or off of the screen. I could make it small. I don't know. And I'm about to grab myself a brew. So grab yourself a brew or whatever you prefer, a tea or a coffee, whatever the hell you prefer. Grab yourself that. And we're about to watch these documentaries. I chose these documentaries because when I watched them, they were motivational. And they reminded me of like back when I was first learning trading and stuff like that. So they have a little bit of good information in them along with like just the mindset that you need as a trader. So I thought it'd be interesting for you guys to check these out. I don't know if you guys have ever watched like videos where you guys have seen like trading or stuff like that, trading movies. There's one called, obviously The Big Short is one of them, I think. Another one is called Margin Call, I think is another one. If you haven't seen these, you have to watch them. Like these are like must for any trader. The Big Short, I think, is one of them. Margin Call is one of them. And I think those are the two. Obviously, Wolf of Wall Street. That's like the one everybody knows. But like I'm talking about like the ones that you need to know. But yeah, so we're going to check these out and just chill. And I'll be dropping the weekend update prediction on tomorrow. So if you guys want to see any technical analysis or anything like that with predictions or stuff like that, tune in tomorrow. It's probably going to be via video, not via live stream. So I'm going to go ahead and grab that brewski. I put it in the freezer so it would be extra cold. And shout out Bitcoin. Shout out Bitcoin still doing its thing. And we'll talk about all of this tomorrow. All right, let me let everyone know too. I'm up on the live. Let me turn that sound off so it's not still on. All right. And again, shout out Billionaire Bears. This is where I found the documentaries. I don't know if they're original or not, but I'm pretty sure these are content that they made. I'm just going to leave the chat off of the screen. What up, bro? What's up, dog? And I figured if you guys want, this is up to you guys, obviously, but if you want and you like this kind of stuff, like I'll do another one. I'll watch the first couple, like one or two. And if you guys want me to do something like this over the weekend again, I can. Just let me know. We could like watch the other few, but they're about like only like 15 to 20 minutes a piece. The longest one is 30 minutes, 29 minutes and 9 seconds. But I'm watching them in order because they kind of add context to each other. And I believe there's only these 5 videos, I believe, on this channel. Yeah. Just pull this up. Rockets in the chat. AMC doesn't go under 7. Man, I can't wait to talk about all that stuff. Yeah, but don't get discouraged, bro. Don't get discouraged. Even if we do go under 7, don't get discouraged, bro. But yeah, I'm gonna talk about all that this weekend. I don't know why Weeble keeps doing this, but you guys keep noticing I have to keep moving this back up. But yeah, it's kind of odd that we closed right at 693, right? Based on a true story. This is all based on a true story too, guys. So grab yourself a popcorn, grab yourself a brew, and let's dive in. Let's dive in. Let's go. August 15th. No free promo. Even they turned it the perfect way. They got me, bro.
1979, when Japan is just entering one of its all-time greatest booms in the stock and real estate market.
Let me turn that volume up. Let me make sure the volume. Let me put my headphones on too. That would make a lot more sense. Damn, I didn't even have this shit right. I'm gonna rewind it. My bad. What up, bro? I'll have it right next time. My bad, guys. I gotta put headphones in so the mic can't hear and turn the sound up. I didn't even think about that. Headphones check. Make sure that sound right off of OBS. I'm just gonna turn it on. This is what we need, bro. We need it.
1979, when Japan is just entering one of its all-time greatest booms in the stock and real estate market, with Japan absolutely dominating international markets in the 1980s. Japan was developing unrivaled technology and workforce efficiency. In 1988, the 8 largest banks in the world were Japanese, and Japan accounted for almost half of the global stock market. In this climate in 1979, a clever little fellow was growing up in the streets of Tokyo. While his true identity is still unknown, this kid would later go on to be the legendary name Sis, the most notorious day trader in Japan. Siz's first lesson in day trading came in kindergarten. Sis loved playing games but hated losing. He and his kindergarten friend would often go to the local snack store to purchase snacks and play the lottery game. However, they always walked away with a loss, and as competitive as he was, this was upsetting Sis. After months of repeatedly buying in and losing, he had enough. One day, being the clever kid that he was, Sis came up with a plan to beat the lottery game. Instead of buying single lotteries, both Sis and his friend each bought themselves an entire box, feeling confident that this way, they would definitely win. They started handing in the numbers at the counter, and the results were astonishing for both Sis and his friend. Much to their surprise, both the winning numbers in each box were exactly the same. While he did not know it at the time, that day would mark on one of the most important lessons Sis would learn throughout his entire life, the the lesson of the universal law that every game has expected values and patterns. But with the Japanese economy re-emerging after World War II and growing up in a traditional middle-class Japanese household, Siz's parents were extremely strict. His parents wanted Siz to have a great education, which was a problem for Siz as he sucked at academics. Unable to make his parents happy and succeed in academics, Siz was forced into feeling like he's a good-for-nothing kid. As many young kids, Siz dreaded going to school and would spend most of his free time playing fighter games with his friend at the local arcade in Tokyo. Instead of facing the academic challenge, Siz was more drawn to a new challenge, beating his friends at the fighter video game. Having a sharp eye for patterns, Siz was a natural, but his emotional instability made him easy to taunt, which often led to Siz throwing games because of his anger. Determined to be the best player in the arcade, over countless hours, Siz started to learn that he needed to think fast and stay calm in order to win. Shortly after, Siz started destroying all his friends and quickly became a notorious tough player to beat among the local arcade fanatics, which led to him coining the name Siz, which in Japanese means death. However, mastering the game came at a cost. His grades had dropped even further. Despite having built up a sense of pride from his notorious reputation at the local arcade, Siz's true challenge was only just beginning. Having experienced the poverty of World War II, his parents deemed education as one of the most important opportunities for Siz to get a better future. His mom was relentlessly tough on him for getting failing grades and often beating him up with a belt or by throwing her sandal. With limited finances, household abuse, Siz grew up a skinny kid feeling hopeless, trapped by his surroundings.
Trapped in the Matrix.
With no passion for school and middle school coming to a close, his parents were getting increasingly tough on him and started to restrict him from going outside and going to the local arcade unless he improved his grades. Having no choice in the matter, Siz really had to bite through it and just wanted to get it over with as soon as possible. After middle school, his parents decided he would have to study mechanical engineering as his relatives held good positions in the manufacturing business. Spending his college days locked in the bedroom, he would get lost in the virtual universe of Ultima Online, developing his character, forging weapons, and managing his resources, or as he would later call it, building and protecting assets. Despite his gaming obsession, Siz, with barely minimal grades, got a degree and job as mechanical engineer in the family business. Hoping his new job would please his parents, he was further disappointed when he realized nothing in his relationship with his parents had changed. Being trapped in a 9-to-5 as a mechanical engineer, having no girlfriend and little to no money, Siz was feeling dead inside and lost in life. Being the prideful and competitive kid he was, Siz wanted to win now more than ever. Feeling unhappy with his life and determined to prove his parents wrong, Siz decided he was going to do whatever it takes to escape the boring system. From his failure to get the girl he liked and the poor upbringing with his family, he realized that only one thing was going to make all heads turn. And the only thing the system cared about was money.
Is that it? I was gonna say, yeah, BNF. The BNF one is dope. That's one we're gonna watch too.
In the year 2000, at the age of 21-year-old, Siv saved up $30,000 worth of yen from his mechanical engineering job and started battling the market as a trader. His sole obsession in life became, how can I beat the markets? He entered with the classic strategy of buying undervalued, quality companies with the objective of holding them long term. However, he quickly realized this wasn't going to make him money fast enough. So what trading strategy would allow him to make the daily wins? He quickly shifted to day trading and a more active strategy of scalping, buying and selling short gains multiple times a day to generate a daily earnings.
You will always come back, right? Like, even if you buy and hold, right, you will always come back. That you will find, like, you will always come full circle to scalping, right? Like, you might start off like buying and holding, which some people do. That's the way a lot of people do. But you will come back to scalping. Some people start off with scalping and go buy to hold.
But but his experience with the market was limited, and even though he had great pattern recognition, macro variabilities and a high risk often led to an equal amount of losses, getting him nowhere near his goal of making a lot of money.
JCOM.
Despite the repeated failure, Sis refused to give up. After a fateful encounter with the legendary Japanese day trader B&F, and determined to beat the odds, Sis developed his new strategy centered around his gaming-honed skills, pattern recognition.
You'll find that's key as well, pattern recognition.
Sis started training emerging trends and patterns using a few key indicators off the daily chart, the 5-day moving average and the 25-day moving average, determining the direction of the trend based on the angle of the cross. And that hit. He was quickly growing his account to a tune of 100K. Regardless of the early success, he realized his strategy still needed some fine-tuning. Just like his favorite online game, Ultima Online, and as many experienced gamers know, one of the most important lessons that you can learn is understanding when your opponent is too strong and choosing to get out. The stock market is no different. As a day trader, Sis didn't care about a company's fundamentals or earning reports. He knew in essence he was up against people. Using his gamer experience of knowing when to get out, he started minimizing his time hold of losing bets and increasing the time hold on winning bets, which dramatically improved his earnings and further snowballed his early success.
So basically what he just said is his losers he cut quickly, his winners he let them breathe a little bit, he let them run. And again, it's a little bit more risk, but again, that's genius. That's genius.
Account grew to $3 million worth of yen by the age of 25. His determination had paid off, and he beat the market, making lots of money in the process. Having proved his parents wrong and changing his environment, his new life came with a newfound confidence and vigor flame of pride. With each win, he felt like he restored a part of his soul and made him feel alive again. But Sis would soon learn nothing stays the same forever. His overconfident chat style on Japanese forums, 2chan, and his rapid growing gains on the markets quickly birthed him the reputation as one of the most notorious and aggressive day traders in Japan. His gambling habits and wild dog reputation started growing him a cult-like following amongst Japanese day traders and communities. His increasing attention to successful trades fueled an even greater flame and monstrous sense of pride. He was unstoppable. When he was wrong, he lost small, and when he was right, he won big. Trade after trade, Sis was growing in skills and money. He transformed his account from 3 million yen to 30 million yen in 1 year. He was a money printing machine, an outlaw who beat the system, and a legend. There wasn't a single Japanese day trader who hadn't heard of him. With the weight of his notorious reputation on his shoulders, his pride started messing with his brain. Despite having beat poverty, the numbers in his bank account started losing their significance. The thrill he felt from the trades winning back his freedom was starting to fade, and the money he so craved for as a kid was starting to feel like just another number on the computer screen. What more was he missing? With his growing account size and decreasing satisfaction in his wins, Sis started increasing his trading size in an attempt to recreate the same highs as the trades in his
I was going to say, he's about to start YOLOing.
early day trading career. However, things took a turn for the worse.
That's funny.
On January 17, 2006, News spread that a young Japanese e-commerce company called LiveDoor was under investigation for accounting fraud. The news spread like wildfire across Japanese markets, and investors started to panic, leading to numerous sell-offs and triggering countless stop losses. Sis was quick to catch on, but was unable to save his position, as the large account size prevented him from quickly exiting the market, forcing him to have to wait for his sell orders to fill. The market was ruthless. As the storm settled, 92% of Japanese stocks had dropped and Sis was down $5 million, his greatest loss ever. In true prideful fashion, Sis joke messaged his fans, "Hey, I'm losing $5 million," referencing Son Goku in a play of words. Despite trying to brush it off and still growing his account significantly on a yearly basis, the losses didn't stop there, and Sis would soon face his toughest battle yet. After a gut-wrenching loss, Sis wanted to defeat the markets more than ever. However, his mind was clouded. Trading was no longer about fighting to earn his freedom, it was now about winning. What was his strategy? Double down on his moves.
That's like a lot of traders will do in the beginning is they will lose a trade and then want to double down, triple down, and like keep trading that day. Like sometimes that's why I said in a couple of streams, like sometimes it's good to just take a break, chill for maybe a day or two after losing a trade, just so you can get your mind right, get your mind clear, and come in with a fresh head and come in with a fresh state. So you can see this guy was nice, man. This guy was nice. He grew his account nice, but you can see even he, later down the road, after growing his account, made similar mistakes that someone would make in the beginning.
Focused and once again determined, his grown market experience and long-found strategy had him printing his money back at record speed. However, the markets are unforgiving. Sis' pride blinded him from learning the important lesson of increasing his trade frequency and sizes. He was suffering from a serious case of gambler's fallacy. The countless hours of trading were also taking a toll on his health. With the recent increase in trading volume, the accompanied stress was giving him gray hair and chronic stomach pain.
Hey, sometimes that can work out for you, man.
August 2027, after two Bear Stearns hedge funds filed for bankruptcy, the loom and doom of the 2008 real estate bubble started spreading. Mass fear spread amongst investors, causing the Lehman Brothers stock to drop sharply in less than 24 hours. In this single day, Sis lost $6 million of his wealth.
Imagine losing $6 million. Imagine losing $6 million in one day. When you start playing with those big numbers, your portfolio starts fluctuating big, man. The fluctuations are wild.
It was no longer a fluke. The market was starting to beat him. The market had adapted, and his large portfolio size now proved his winning strategy no longer worked. And the stress was starting to take a toll on his health. Despite the millions in his bank account, the recent sharp losses had set him back multiple years of hard-earned gains. Games taught him to think fast and stay calm. One of his legendary quotes his cult-like following worshipped him for, yet lately, he hasn't quite felt it. His recent aggression and large portfolio had made him slow and blind. He had proved his parents wrong, got filthy rich, and beat the system. What else could he want? While his humble lifestyle didn't feel the losses, his notorious pride did. He worried he would lose the hard-earned acknowledgement he had so fought for. After such a painful loss, yet still having such a large fortune, many men would have rolled over and just laid back and enjoyed the rest of their lives. But Sis is different. After reflecting on his journey, Sis realized he was the problem. The weight of his pride had left him blind and arrogant. He hadn't become a worse trader, He had simply stopped changing and improving his strategy to fit the current circumstances. Even though his external environment had changed, inside he was still the same clever kid who was playing games. And the one thing he hated more than anything was losing. In order to be the undisputed again, he would have to create a new day trading strategy, one that would be better adapted to his portfolio size, yet still allow him to make the large profits with the aggressive plays. Refusing to compromise on his pride and losing his title as one of the top dogs of Japanese day traders, Sis set out to make the largest size trade in his entire day trading career. It's August 24th, 2015, and 9 minutes after the opening bell, and all the major stocks have started to plummet. Fear is spreading amongst the trading floor as more and more seek to withdraw their investments. News had spread that a recession was imminent, as China's decade of growth had finally come to an end. It was Black Monday, and a reversal was coming, like never seen before. In a tiny bedroom apartment in Tokyo, Japan, there was one man tensely staring at the red numbers on his 7 screens. Betting against the market
with only a few videos.
It was dangerous, but it was now or never. There was no going back. After being short the paper futures of the Nikkei 225 stock average for the last 2 weeks, small profits started rolling in. Despite a $12 million profit, it wasn't enough, and he decided
shorted the market at the top, baby.
Small profits started rolling against the markets was dangerous, but it was now or never. There was no going back. After being short the paper futures of the Nikkei 225 stock average for the last 2 weeks, small profits started rolling in. Despite a $12 million profit, it wasn't enough, and he decided to further double down on his positions. Struggling to sleep that night, news had spread that the New York markets were collapsing. This thing was turning global. By morning, he was staring at double the profits. He knew his trend trade was right on mark. He went in for the...
Now, I'm not saying this has anything to do with us, but these traders that you'll see, guys, all of them, or most of them, a lot of people, especially legendary ones, got bank off of shorting the market at the top. Just saying. I'm just saying, guys. DataZero family, SQQQ. Just saying. Just maybe. Hey, you never know. You never know.
Final stage of his trade, betting on the market bounce. The stress was enormous. If his timing was off, he would once again lose it all. With excruciating stomach pain, he transferred his profits from his short positions to his longs, slowly buying in calculated amounts as the downward momentum was decreasing. The momentum shift. As soon as the candles started coloring green,
so he shorted the top, and now he's going long at the bottom like a beast, bro. Like a beast. Let's see if he nails it.
He was already determining his long exits. Countless years of trading had all come down to this one moment. It was the perfect trade. That single day, Sis walked away with $33 million in profit, and his large volume size had moved the leading index of Japan. One man had moved the Nikkei.
Yo, he's a whale. He's a whale. Bro is a whale, bro. Do you hear what he said? Run that back. Yo, we gotta run this. We gotta run this trade back. Yo, this trade. This is why he's legendary, bro. This is why he's legendary. Run this trade back, yo. Run this trade back and listen to what this man did. Let's run this back. Let's run this back.
Allowed him to make the large, and the one thing he hated more than anything was losing. In order to be the undisputed again, he would have to create a new day trading strategy, one that would be better adapted to his portfolio size, yet still allow him to make the large profits with the aggressive plays. Refusing to compromise on his pride and losing his title as one of the top dogs of Japanese day traders, Sis set out to make the largest size trade in his entire day trading career. It's August 24th, 2015, and 9 minutes after the opening bell, and all the major stocks have started to plummet. Fear is spreading amongst the trading floor as more and more seek to withdraw their investments. News had spread that a recession was imminent, as China's decade of growth had finally come to an end. It was Black Monday, and a reversal was coming, like never seen before. In a tiny bedroom apartment in Tokyo, Japan, there was one man intensely staring at the red numbers on his 7 screens. Betting against the markets was dangerous, but it was now or never. There was no going back. After being short the paper futures of the Nikkei 225 stock average for the last 2 weeks, small profits started rolling in. Despite a $12 million profit, it wasn't enough, and he decided to further double down on his positions. Struggling to sleep that night, news had spread that the New York markets were collapsing. This thing was turning global. By morning, he was staring at double the profits. He knew his trend trade was right on mark. He went in for the final stage of his trade, betting on the market bounce. The stress was enormous. If his timing was off, he would once again lose it all. With excruciating stomach pain, he transferred his profits from his short positions to his longs, slowly buying in calculated amounts as the downward momentum was decreasing. The momentum shift. As soon as the candles started coloring green, he was already determining his long exits. Countless years of trading had all come down to this one moment. It was the perfect trade. That single day, Sis walked away with $33 million in profit, and his large holding size had moved the leading index of Japan. One man had moved the Nikkei. Nowadays, not much has changed for Sis in terms of lifestyle. He still enjoys playing video games and actively engages in the same passion of gambling. Now being a married man and having children of his own, Sis still spends a few hours every day moving the Nikkei. Despite all his wealth, Sis still lives humbly. And despite having one large property, Sis shows no records of spending and living a luxurious lifestyle. Besides making sure his family's happy and his parents are comfortable and healthy, Sis spends most of his money on the one passion he loves: playing the game.
So yeah, there you go. That documentary was fire, dog. That joint was fire, bro. And it has there's a lot of lessons in it, and it's slightly educational. I mean, you could take educational value out of anything, but you can see how it's some of their strategies and things that you can use, like lessons, stuff like that. But it's really motivational as well. And again, that's why I picked these when I found them. I thought I would. I figured everyone had seen the typical documentaries, but I'm not sure if everyone had seen these, so I wanted to share them with you guys. So we're gonna go ahead and watch the next one again. Like I said, they add context to each other, and we can do this again on the next few next week next weekend if you guys want. All right, let's go ahead and watch the next one. But yeah, basically that last trade, he was short the market on the top. So he shorted the market. He was short for a couple weeks. So basically he caught a short, like basically it was like if he caught a short up here, was short a couple weeks, and then if it started to reverse and then bull ran or something like that, it was like what he got. And of course it showed you time periods and stuff like that. But he basically caught a short at the top, and then when it caught the bottom, he went long. DCA'd in at the bottom, went long. That's a perfect trade, like he said. All right, let's watch this next one. Watch them in order. This one got Matt Damon in it. DataZero family going to be legends in the game. Hell yeah, bro. Hell yeah. Bro, that's the only way, dog. If everyone could just make like $1,000, nah, everyone needs like more than that, right? That was a random number, like 50,000. If everyone could just have like 50,000, I'd be cool. I'd be cool. Christmas is coming, so we got stuff to buy. We got stuff to buy. All right, here's the next one, guys. On the legendary trader Kyle Bass. The last one was CSI Sis. Here is Kyle Bass, the $4 billion short trade. Again, you'll notice shorting is a common theme here.
At the start, it was all different. No, this isn't your white picket fence American dream start. I mean, the kid was popping pills for Christ's sake. Yeah, you think that sounds wild? Wait until you hear this next part. He didn't even need them. That's right. His mom was what you call a hypochondriac and self-diagnosing champion. A true medical infomercial evangelist.
Today, 3 out of 4 doctors recommend the ingredients in Anacin for headache pain.
She decided Kyle will be better off getting started on medication early. For his health, of course. In reality, it helped Kyle put on weight. Growing up lower middle class, his family lived paycheck to paycheck. With hand-down clothes from his father and a daily medication routine, Kyle was different. It separated him from the kids at school. Luckily, his father was a hotel manager in Miami, so when the hotel switched owners, the entire family relocated to Dallas, Texas. Thrown into a new environment, the kid was desperate to change. And shit did. Kyle flipped the script. He loved the waters. In Dallas, he developed a passion for diving. His relentless work ethic for diving later became the backbone of his trading. He worked so hard, he even got a scholarship. Besides diving, college was boring. Chemistry labs, molecules, anatomy, yawn. It's putting me to sleep already. But that's where his life was heading, and he hated it. Every chance he got, Kyle hit the waters to get his mind off things. In his junior year at uni, he faced a choice, picking an elective. Knowing he couldn't take another life-draining class, instead he wanted something more exciting. In his search, he came across a class titled Options and Futures. Deep down, money has always sparked his...
I want to know what school he went to that had a class for options and futures. I am jealous as hell, bro.
Curiosity. Ever since his childhood and his deep-rooted anxiety towards it, he wanted to learn more, so he took a chance. And like an elk steak fresh off the grill, its juicy taste consumed him. Up till now, his relationship with money had been one of fear and ignorance, even though his class covered a lot of the basics, bonds, stocks, options. To Kyle, it was the book of revelations, the key to escaping living life paycheck to paycheck. After the first class, Kyle took the class book back to his dorm. In a week, he had finished the whole book. Despite his pre-med basis, Kyle finished top of the class, and it ignited his fame. He wanted to switch major. Fearing his parents' reactions, he debated his choice. Could he do it? What if he didn't do it? Would he spend the rest of his life bored out of his mind and unhappy as a doctor? Nah, he didn't want that. So for the first time in his life, the kid followed his gut. He switched his major to finance with a focus on real estate. Real estate had always been historically somewhat safe.
That'd be a dope opportunity.
Right after, he went crazy. Kyle had became obsessed. He was so intrigued with mastering the concept of money. Every day after class, he walked off campus reading any finance book he could get his hands on. Plus, we're talking any Vincent Norman Peale and Tony Robinson book out at a time, and Tony Robinson wrote a lot.
And I did.
In exchange for his college parties and endless diving, at a slow pace, he became comfortable with finance. Naturally, the kid graduated with a degree in finance and undergrad in real estate. He walked away with a solid understanding of finance and a feeling of direction. From a spark flame, it grew into a burning desire. His curiosity for compounding interest molded into resolve. He knew he wanted to achieve financial freedom by mastering finance. And to become a grandmaster in finance, he knew he would have to play in the big leagues. There was only one place to go that's wild enough to satisfy those desires: Wall Street. In the early 1990s, Wall Street was not a place you walk into. You were born into it. Yeah, business was booming, there was plenty of positions, but it was a dog-eat-dog environment. Competitive firms were doing whatever they could to get an edge, and only hiring the best of the best was part of it. And best not as in skill, but best as in fanciest credentials. You know, the Princeton, Harvard, Stanford type of credentials. Places where you couldn't get in unless you had a wealthy family or senior position uncle who would get you that spot. It was cutthroat. But Kyle had already overcome his first obstacle, his mindset. I mean, he was still permanently spinning pens and tapping his feet in every conversation. But hey, mentally, he now had direction. He wanted to get into Wall Street. He wanted to prove himself and achieve true financial freedom, no matter what the cost. Educated on money, Kyle was now thinking like the wealthy, aiming to minimize the time he traded for money. Plus, he had picked up the habit of reading books, from which he learned the power of positive thinking and grit. His credentials were probably as worthy as Dogecoin, yet he refused to compromise. There was nothing to go back to. Kyle had made a simple decision. He was going to interview with every single Wall Street firm until one of them let him in. Kyle wrote countless letters. Sacrificing any last bit of pride he had, he knocked on all their doors. But it got him interviews. And some of these interviews were at retail brokerages. After his third interview at the retail brokerage firm Credential Securities, the interviewer asked him, "Listen, Kyle, I'm going to be honest with you. We normally only hire experienced professionals, people who are moving to their second career. We've never hired someone who's straight out of college. So why should I hire you?" Or translated transparently, why hire a kid with limited economic understanding and no wealthy connections? To which Kyle responded, "Because if you don't, you'll be sorry." But the high was quick to pass. This was Wall Street. And as a lot of rookies on Wall Street, it was straight to the trenches. For a year and a half, Kyle got a start at Prudential Securities, where he went through all their global trading program. With minimal pay and crazy overtime hours, it's mentally tough. His superiors tore his guts out. He had no personal life, but going through that program, Kyle learned a lot. All the different hierarchies of thought and specializations of the big firms. The prodigy finished top of class at Prudential. Within no time, he got an offer for Bear Stearns. With the $2,500 he had earned, he bought his first ticket to Geneva to explore a new industry: hedge funds. While it's nothing new to you traders now, at the time, it was revolutionary. Like crypto nowadays, in the 90s, hedge funds was the new booming game, and Kyle wanted in. But he was still a rookie. His new role at Bear Stearns was simple: make the big shots look good. He started out as a research analyst. He researched potential interesting company stocks and presented his findings. The big shots he pitched his ideas to were a group of short sellers. Inspired by their work, Kyle competed against fellow rookies and tried to work hard to impress the big shots. Working long hours and often pulling nighters, Kyle was hungry. His focus in life was identifying overvalued or fraudulent stocks. He researched everything from East Germany shipyards to Texas mortgage lenders. Kyle's macro analysis skills were growing. His research tips were solid, but it wasn't enough. If you wanted to get ahead and move up the ranks, you needed an edge. Something all the big shots at the firm would turn to you for. An edge that no one else developed. After years of grinding his way up at Bear Stearns, Kyle had developed his edge. He developed a talent for sniffing out corrupt bullshit, and he wasn't afraid to let anyone know. Short selling based on
Wonder what he would think about AMC.
macro analysis.
Short selling based on macro analysis. Boss.
See, Kyle was smart. He realized that most traders were limiting themselves by focusing only on the US markets. Kyle wanted to keep the freedom of looking at a global scale. Even though he often made micro-scale trades, shorting overvalued US company stocks was still the name of the game. But with his macro perspective, he could also take global-driven event trades. This liberty allowed him to concentrate only on trades with the largest upside. His edge was unique, and every big shot at the firm wanted a piece of it. At the age of 28, Kyle became Senior Managing Director, one of the youngest in Bear Stearns history. His tireless dedication had paid off, but not without paying a hefty price. He'd sacrificed his youth to the firm. Despite being behind the analysis of some of the greatest trades, he was still answering to the big shots. While he did all the work, he still relied on the so-called experts to make the final judgment call. They were the decision makers. From shaping his mindset in college to crafting his skills and unique edge over the years, Kyle had grown. But in order to satisfy his grand ambition and truly achieve freedom, he decided there was one final step to take.
Better get his own portfolio.
Risking everything he had built over the years at Bear Stearns, Kyle decided to start his own firm. He launched his firm, Hayman Capital Management LP, with $5 million of his own money and $28 million from investors. The pressure and constant feeling of anxiety reached new highs, but he knew it was his only shot at achieving his grand ambition. But starting your own firm is not exactly a walk in the park. It's like chewing on a piece of glass and staring into the abyss. Not exactly a fun experience, unless you're into that, of course. To build a hedge fund, you need reputation. Since your sole purpose is to manage other people's money, you need to figure out how to get the wealthiest eyeballs on you. And well, Kyle had jack shit. Other hedge funds managers have reputations from their iconic trades and historic performances. Kyle wasn't known for anything. To make matters worse, he was now responsible for the livelihood of other people. Kyle was good-natured. He hated firing people. Trying to figure things out, he was burning through his fund's war chest, a lot of it his own money. With average performance, some of the investors started to express their doubts. Kyle had gone from the golf court back to trenches. He needed a home run play quick. He felt the pressure tightening around his neck.
That good old home run play. I need it. You know when you just need that home run play?
While at a wedding in Spain, Kyle was taking the edge off with some fine wine, finally catching a breather. He struck up a passing conversation with an NYC investment banker who brought up an interesting topic: synthetic CDOs. That's right, a bubble boy. For those of you that watched The Big Short, it was the key to the 2007 house.
Did he just say synthetic CEOs?
Brought up an interesting topic: synthetic CDOs.
Oh, CDOs.
That's right, a bubble boy. For those of you that watched The Big Short, it was the key to the 2007 housing market crash. AKA the synthetic CDO was the atomic bomb with a drunk president holding his finger over the butt.
That's me, bro. That's me looking at. That's me looking at the SPY going up. Looking at the SPY going up on these crazy fundamentals, bro. That's me right there, bro. This is when the SPY's going up on these crazy.
Kyle couldn't believe it. Confused with the depth of dog shit behind the conversation,
Yeah, hit the
he
like
knew he
button.
had to learn more. So at the hotel after, this dude gave him a number to a CDO manager. At the end of the day, he took the call with the manager, who proceeded to explain to him the true complexities of dog shit CDOs. While he learned a lot from the call, Kyle felt more anxious and disturbed than ever. If he was right, it would bring down the entire economy and destroy millions of lives. Chilled to the bone, all his trained corruption and fraud detecting
got
instincts pointed him towards a massive opportunity. He smelled the dog shit miles away. He had to figure this thing out, so he set his eyes on a California shop called Quick Loan Funding. Small place started by a guy named Daniel Sadek, ex-car salesman. But the dude was printing money. He even funded a $35 million film for his fiancée actress. His firm hired private investigators to test how hard it would be to get a mortgage. Within no time, the investigators all secured mortgages with no income verification or down payment. Based on additional internal research, this was the biggest case in American history. He knew he had hit gold, the kind of trade that would get him his reputation. But no one believed him.
There's always that guy in the suit, right? You come with the info, right? And there's always a guy in a suit, right?
Every investor he pitched said he was crazy. He pitched hundreds of investors in an attempt to get more capital. With minimal success, it looked hopeless. No one cared. The pressure from running his own firm was building up. Burning through his cash, losing even more investors' faith, he had nowhere left to turn. This call would make or break him, potentially losing everything and utter humiliation in the industry. His back was against the wall. With all the experienced investors telling him he was wrong, it was hard to swallow. When everyone tells you you're crazy, you're the one that's insane. The fear was paralyzing. One night, working overtime in the office, he started daydreaming, reminiscing on how far he came, his childhood, the medication, deciding to become a doctor, the courage of changing his path, and the years dedicated to proving others that he was great. His constant fear of feeling inadequate, it had always driven him. And then it hit him. Nothing had changed. It was the so-called medical experts all over again. Everyone always knows better. Regurgitating theory from the college medical books or rephrasing Morgan Stanley research reports in their fancy brownie suits. They all had the answers. But how many of them actually do the work? He knew he did, and he knew the corruption he found. And so Kyle made the call. Despite the high stakes, he would rather go out betting on himself than to continue through the fear of others. Kyle decided he would have faith in his own work.
That's key, people. That is key.
Reignited by his youthful flame, Kyle set out to short the housing market. He switched up his approach. Instead of pitching investors the opportunity, he pitched them the low risk to reward. His new approach was more risk-averse. To reassure investors, he shorted the time frame. Instead of going in early and maximizing his profits, instead he would wait and let the key indicator.
Start of the collapse. Kyle waited for more key indicators to fall. Where other investors got in, aka Michael Burry and them. This is before 2008. So Michael Burry and them positioned themselves way back in like 2005, y'all. That's what you guys have to realize. Like the time frames for these trades, like they held for a long, long time until the trade went their way, guys. Just putting that in your head, guys. Just putting it in your head. They held for a long, long time until the trade went their way. This multiple years.
Indicators fall first and then go in. Fewer profits, but more investors. And it was the right call. With more investors on board, Hayman Capital took all hands on deck to prepare their biggest bet. There was no going back. Kyle went all in. If they failed, his firm Hayman would be over. It's August 26. The head trader at Hayman Capital charges towards Kyle's office. The KPIs they tracked on the mortgages had fallen below their set entry point. Unnoticed to most, the falling dominoes had hit a point of no return. Kyle's team began purchasing CDSs as a bet against the multi-trillion-dollar subprime mortgage market. This was it. What followed was months of suspense and disbelief that their positions weren't marked down the way they should. The costs? Millions in premiums. But unlike Michael Burry, he had started his trade way later. As in early 2007, his bet started playing out. Profits started rolling in. Fear had started spreading as subprime mortgage lenders started going bankrupt. Instead of enjoying the wins, Kyle managed to get more investors to tag along in his trade, doubling down on his play. The next few months were the most...
He's a madman. He's a madman, dude. Caught the short, got in right where he needed to, and he brought everyone with him.
Stressful period of his life. If the fraudsters figured out a way to keep up the facade, Kyle's wins would revert back to the premiums, and he could once again lose it all. It was the perfect trade. When it was all said and done, Hayman Capital made close to $4 billion for its investors off the trade.
$4 billion.
Kyle used the leverage power of derivatives to short sell about $4 billion of subprime securities to synthetic CDO market. In the following months, news spread of Kyle's legendary trade. He had earned a reputation, so much so that Kyle testified as an expert witness before the U.S. House of Representatives and the Financial Crisis Inquiry Commission. With Hayman Capital's success and making millions for himself in the process, Kyle felt he had become a master of his own fate. While the legendary short saved his firm and made him crazy rich, Kyle was still looking ahead, driven by his constant fear of inadequacy and the pleasure of proving people wrong.
I constantly feel inadequate, which maybe is what drives me.
Kyle has his eyes set on becoming an A-plus firm. For the past few years, Kyle has been focusing his research on what he believes is the next big opportunity for the coming decade: China,
Evergrande on the brink of collapse,
and Japan.
It will be further depreciated, or because it can be overshooting, it can be coming back.
But what does your own research work tell you? Is he right?
Listen to this right here. The key is to do your own work. This is why I pick these documentaries, guys. This is why I pick these documentaries. I'm telling you, this is deeper. This is deeper, guys. Do your own work. But yes, this one was another decent one. I think we'll watch one more. And if you guys want to do this again, let me know. Let me know in the comments. Let me know on the live stream. Let me know wherever. You know what I mean? Just let me know. And we will. And we'll watch the rest of them. Let's go back. Sorry. Shout out Billionaire Bears. All right, yeah, we're going to watch BNF for sure. Hell yeah.
2005.
6 minutes long, 26 minutes long. All right, let's go.
Billionaire investor must.
This one is really good, guys. I've seen this one before.
Yoshi Son was looking for a new way to grow his wealth.
What's up, Cody?
Despite his $4.3 billion, not everybody folds under his pressure.
Thank you for coming today.
It's my honor.
Let's go over the deal we talked about over the phone. I know you said you are not interested, but I believe every man has a price.
Sir,
Before you say anything, I will double your management fee to 50% and a performance fee of 30%
Sir.
and $3 billion of my net worth to manage.
So many people down here
What do you
in Florida
say?
right now. It's crazy because of the holidays.
I just trade stocks in a closed room alone and know nothing about what's happening in the world. It's almost cheeky for me to advise someone who has much more experience in life. I crafted my own style through experience and I don't like to be influenced by others' opinions. For that reason, I cannot manage your billions, Masayoshi-san.
You will regret this for the rest of your life.
BNF had made a name for himself after the JCOM trade in 2005. Everybody wanted a piece of him. He became a Japanese legend known as the JCOM man. But to BNF, it was just one trade. Cup ramen, anime, and spending most of his days alone in a room day trading. After making 2 billion yen in one trade,
Anime and gaming makes traders.
BNF felt the same. He just wanted the next trade. But as he adapted to his newfound fame, a deadly storm was coming. As the global market started showing signs of a bear market, the greatest financial bubble of his lifetime, one that could wipe out his portfolio size. He knew he had to cut out the noise. He had always kept it unprofessional. Because he didn't kiss the ring of the people with the checkbooks, BNF had set up his trading in a tiny apartment. His small, unprofessional setup reflected BNF's distrust of the system. 1986 Osaka. What are you doing? That's way too far. We gotta rewind track. In 1986 Osaka, growing up, it was the same. BNF spent most of his days inside. But then a blessing happened to BNF that turned his whole worldview bright and made him ready to believe you could outsmart the system. BNF was living a college life. Like a lot of you, he was experimenting with his life purpose. Ramen, anime, sake. Not much had changed until one day he came across an episode.
Japanese booze, if you
In
don't know.
1989, NHK, a Japanese TV network, aired a 4-part series about the world of finance, with the first episode titled The Man Who Lost 50 Million. The episode covered the legendary hedge fund manager Victor Niederhofer. Victor Niederhofer was a wild guy. He was a notorious speculator. His fund trading options on the index futures, and he was known for blowing his fund twice. After watching the series, BNF got hooked. BNF was so inspired by the documentary, lifestyle, and trading, he based his trader name BNF on Victor Niederhofer. The game of trading and the freedom it gave, it was the lifestyle he had always dreamed of. But unlike Victor, BNF wasn't born in opportunity. At the time, BNF was a broke college student. He knew he would have to save up for years to even get started, let alone make profits. Are you kidding me? He knew nothing about trading. And he's not like you, he didn't have YouTube. In the 1990s, Japan had very little textbooks on trading, let alone trading via computer. There was no information on it. Even though the odds were stacked against him, nothing in life beat the excitement he felt when he thought about the millions of trading, how his life would change. The charts captivated him. He knew he wanted to become a day trader, against all odds. So in college, he got to work. BNF started working part-time jobs. He was working weekday nights and weekend shifts. Besides rent and cup ramen, he saved as much as he could. In between college and his job, he spent every moment he could looking at charts, day in and day out, studying price action. Like a bear studying currents for its next meal, BNF was learning how stocks moved, studying all the top stocks in the Japanese Nikkei index. In time, he started identifying the meaning in the movements. There was a flow to it. To make up for the lack of available information, he relied on building his own theories on how the market worked. He sacrificed all his time.
The Nikkei is like they said.
After
like
2
the
years,
Tao of the
working
spot.
part-time jobs and studying the charts every single day, the moment had come. By living frugally, he had managed to save up $16,000. It was time to face the markets.
It's described as nothing short of breathtaking, a points drop never before seen on the US markets.
Young, hungry, and disciplined, BNF is anxiously trading to make a living. But the market he faced was an unforgiving bear market. As you know, in 2000, the global stock market had just been hit by the burst of the internet bubble, aka the dot-com bubble. But what you might not know is Japan had already experienced a huge asset bubble burst in the 90s. It was known to Japanese economists as the lost decade, where assets prices dropped over 70%, a decade of terrible economic pain. Despite studying the charts for 2 years, BNF started suffering initial losses. However, through his experience, he quickly developed a strategy that was simple yet brilliant.
This info is key, I'm telling you guys.
In a bear market,
Especially right now.
the overall sentiment is fear. People hate losing and think positive upswings are unlikely on the short term, so they underestimate their likelihood. His strategy was contrarian trading. BNF found when traders are fearful about the overall
There you go, baby. Contrarian trading, baby. In a bear market, BNF does exactly that. It's when your strategy is betting against the market trend. So you basically, the way the market's trending, you bet against that. So you set up the way it's trending. I like doing this. It's the way it's trending. You set up opposite for that and get ready.
Bear market, they will often oversell falling stocks to avoid the pain of losing. Or in BNF's own words, when going for a short-term rebound, what you should focus on is the moving average divergence. In the bear market of 01, I would only look at stocks deviating at least 20% off the 25-day moving average, with 35% being somewhat a safe level to buy. Price would then surge, and I would close the trade in a profit.
So if price went below the 25-day moving average over 35%, so if it was 35% drop, just the way it shows here, I think it says 25 to 30%, with at least 20 to 35. So at least 20 to 35%. Under the 25-day moving average, he would go in. But make sure you note this because it changes a little bit later on. But make sure you note this. 20 to 35% under the 25-day moving average.
But it wasn't that simple. Even after stumbling upon this revelation, a lot of BNF's trades were losses. With more losers than winners, it was painful to see his hard-earned savings shrink. To him, it seemed like some sectors of the market were trickier than others. Despite the pain, he knew it was unrealistic to expect overnight success. Instead, he decided to focus his mind and double down on analyzing his losers. From studying the losing charts, BNF had realized his losers were repeatedly the same sectors, and each of them had different repeating deviations. He concluded the divergent percentages were different per sector, or in BNF's quote from his old 2-channel posts. For the service sector stocks, the range of deviation from the 25-day moving average was between 22 and 30%. For the post-dot-com crash IT stocks, the ranges were 25 to 45%. And for emerging stocks, it was 28% to 60%. Applying different numbers per sector allowed him to find greater entries to the temporary upswings. BNF had learned he first had to develop a feel for the sector before being able to make a trade. With his intense focus, he was producing more wins than losses. But by December 2001, the bear market got even more insane. There was a massive crash in penny stocks. It looked like a market-wide Black Friday sale. BNF saw 20% deviation opportunities everywhere. These were companies with strong brands and often liquid war chests. A lot of BNF's friends he met on 2channel started buying in. It looked like the perfect buying opportunity. But to BNF's instincts, he felt there was a problem. When everything is on fire sale, is it even a sale? So he passed. Having learned that different sectors have different points of rebound, now was no different. Instead of stocking up on the fire sale, he only focused on the extremer cases. Stocks that dropped significantly greater than the market average. Stocks closer to 65% deviation of the 25-day moving average. He made the right call. All of his stocks rebounded after only 1 to 2 days. A lot of them jumped up 50%, with some even doubling after 2 to 3 trading days. Remaining calm and applying his self-developed feel for the market had paid off. If he had bought at the typical levels like his friends, his losses would have been catastrophic. Instead, by the end of 2002, BNF had grown his account to $1 million in US dollars. He had become the great bear of Japanese day traders. The high was exhilarating. He was finally living off his trades. But then a tragedy happened to BNF that turned his whole worldview dark. Yep. The whole world went on a massive bull run. You heard that right. That's the tragedy. While the whole world was ecstatic, BNF was stressed. See, BNF's strategy only worked in a bear market. He needed the fear sentiment. But now the market had flipped. He was facing a whole different opponent. To continue making a living trading, he had to figure out how to beat this new bull market. And what made things worse is he actually had some money now. He didn't want to lose his freedom. To ensure he didn't blow his account, he had to find a system to minimize his risk. From his past trades, BNF learned the importance of market sentiment. To minimize his risk, he decided he didn't want to fight the bullish sentiment. Instead, he wanted a strategy that profited from it. I mean, we all know bull markets. As long as you hold, you will make money in the long run. But you can't day trade that. So instead of holding long term, using his understanding of codependency in the Japanese market, BNF found a new clever way to ride the bull run. When the market's strong, core companies tend to rise with the index. What BNF found is core companies don't go up at exactly the same time. They're always laggers, and that's where he buys. He would ride these laggers up and then sell after a few days or weeks. Since these opportunities didn't appear every day, his trading transformed into a few trades per month. Instead of trying to force his trades, he stuck with his strategy. Through years of experience, BNF had come to view trading not as individual price action, but rather as one global machine. Understanding the relationship between individual parts of this machine and his unemotional discipline, that's his genius. This strategy allowed BNF to maintain profitable returns in the bull run. His account grew by 10 million in 2 years, and that's when things took a weird turn.
10 mil in 2
It's December 2005, 9 a.m., another morning on the Japanese stock exchange. The markets are rowdy as various new tech companies had IPO'd on the market in the last few months. Traders were hungry for that next unicorn company. However, this morning, their eyes were on a new stock, JCOM Holdings, as it went public on the emerging markets. Within minutes, panic emerged. BNF couldn't believe his eyes. JCOM looked to have one of the greatest stock drops in history. Unsure of what was going on, traders were hesitant to buy. Concerns of financial fraud grew, and the internet started going wild over the story.
There's CIS or CIS.
Meanwhile, at Mizuho Securities, a man was fearing for his life. He had made an unimaginable mistake. His job was to sell one share of JCOM at 610,000 yen. But instead, he sold 610,000 shares for 1 yen each.
Dude, how?
After it went live, there was no reversing it. Luckily, the Japanese exchange has what you call a limit up and a limit down, meaning there's a limit to how much a stock can move up or down in one day to prevent highly volatile situations such as these. But it wasn't enough. BNF moved quick. In a matter of minutes since the incident, he attacked. He bought 7,100 shares at the limit down price, which gave him an unbelievable 49% stake in the company. He put half his entire account size on this trade. And his protege, Sis, bought in alongside him.
Imagine that fat finger.
The panic
dude.
escalates as Mizuho Securities realize they can't reverse their trade. In a desperate attempt, they tried to buy back as many shares as possible. But they weren't the only buyers. By now, even institutional players had caught wind of this. Everybody wanted a piece. The price started rocketing as the market closed approaches. His protege Sis cashes out his profits. He even withdrew the money from the bank, fearing government drawbacks. But BNF didn't. Instead, he remained calm. He decided to take a calculated risk and sell only a small number of shares. BNF held 6,000 shares overnight. Would he lose half of his account size or make an ungodly fortune?
Let's go.
For most traders, this would be the most stressful night of their life. But BNF was calm. To him, it wasn't about the money. It was a game. And his opponent had just made a huge blunder of a move. The next morning, while blood was on the streets, the news came out. The JCOM stock had got halted. Fearing legal implications, large institutional players returned their shares and profits to Mizuho Securities. But rogue players like BNF refused. As time passed and government showed no intention of intervening, Mizuho Securities only had one remaining solution: a settlement. Mizuho agreed to buy back rogue trader shares at the expected morning price of the stock. Before halting, that opening price was set at an unbelievably high number of 975,000 yen. BNF had made a total profit of around 2 billion yen, one of the largest profits
So
ever made
ridiculous.
by a bedroom day trader.
2 bill, dog. I'm up now, dog.
Everybody wanted to cover the story. BNF became known as the JCOM man in Japan. Niche trading communities started worshipping as a god amongst traders. He had even won the attention of billionaire investor Masayoshi-san. Despite the high risk, BNF had come out on top. He had now achieved legendary status. Was it time to go pro? He had finally won a comfortable, regular lifestyle, doing the thing he loved. In an interview he did at the time, he said, "I don't enjoy taking money off the account. Seeing the physical amount of cash makes me fearful of how much I'm putting on the line trading. It makes me a worse trader." BNF quickly realized he hated the attention. While the money gave him a comfortable lifestyle, he noticed he had no motivation to spend it on traveling the world or living a high society lifestyle. He would rather grab a drink in town with his friends. Spending the money only took away from his love for trading. He only cared about the art of trading. As BNF battled to maintain his humble and comfortable lifestyle, the tide shifted. The markets were changing. A familiar storm had returned on the horizon, but little did he know this would be his toughest challenge yet. As BNF once again faced the birth of a new bear market, he found himself returning to his roots, revisiting his same old strategy. The Japanese news even covered the crumbling banking system of the US. This was a global event, but BNF had been studying it for months already. On September 13th, 2008, BNF made a similar bet to JCOM, and he invested $6.5 million in the Lehman Brothers stock. Lehman's stock had fallen 73% that year. See, Japanese banks were safe and boring, and this was the fourth largest investment bank in America. It had a strong reputation. To BNF, a rebound was inevitable, but he made a critical mistake.
It's not the bottom.
BNF underestimated the level of corruption in the US banking system. Even though it met all his bear market strategy deviation targets, he didn't know the US market. He hadn't studied it the way he spent years studying Japanese stocks, and the fundamentals were off. He had broken his own golden rule. His $6.5 million went to zero overnight. After suffering such a painful loss, BNF swore he wouldn't trade the US
Yo, he lost it all on one trade overnight. All of it gone. Zero.
markets ever again.
He tried to catch the bottom.
But the storm wasn't over. The US housing market crash led to a global collapse of the financial system. For bear market traders like BNF, when there's blood on the streets, it's time to go in for the kill. On October 10th, 2008, he smelled blood. The global financial system was collapsing. The Japanese markets were taking a heavy hit, and the Nikkei 225 index was no exception. The Nikkei had dropped, and BNF saw an opportunity for a rebound, so he bought in, following his old principles. But the markets continued to move against him. As the market closed, he faced a decision. Should he cut his losses or hold overnight? Knowing the exact setup had worked for him in the past, BNF decided to hold. But the markets got even worse in Japan. In 2008, Japan was one of the countries hit hardest. With the global financial crash, people were buying a lot less consumer products. And at the time, Japan had restructured their economy around export and trade openness. 90% of Japanese export was industrial supplies. Though most of it went to Asia, it was used for Western products. which took a huge demand hit. Further, Japan had been increasing its trade openness. While it helped Japan climb out of its stagflating economy in the 90s, it also meant they were now more prone to shocks on the stock market. The next morning, BNF woke up to nothing but red numbers. His old deviation targets seemed to no longer work. The index kept dropping. BNF was on a losing streak, heading towards greater losses. While most traders would have went on tilt and made desperate attempts to reclaim their losses, BNF remained calm. He found the discipline to cut his losers short, but after the Lehman loss, the hits were starting to add up. He had to go back to the drawing board. Nobody can time the bottom, or else we would all be rich. His strategy of gradual increase in position size based on the 25-day moving average deviations and differentiating per sector, it had always worked. And after careful analysis of the market, he felt now should be no different. However, he noticed over the years his deviation targets had become outdated. Markets had grown and rebounds across the Japanese sectors had become quicker. So, he recalculated his deviation.
So this is why I said, notice the price targets change. And then also, I'm going to bring this full circle, but basically it's like the same thing with today's market. There's more money, the swings get bigger, the moves get bigger. Price targets change because things become more volatile.
Targets per sector of the Nikkei index. On October 27, the Nikkei had fallen. BNF went in for another rebound. The market refused to work with him. The Nikkei continued to fall. As time passed, the weight of his trades got heavier. Watching anime to calm his mind no longer worked. Had he become too comfortable?
When bank shares get hammered, people's pensions get hammered, so everybody loses.
Meanwhile, as markets everywhere react, the bottom to America's financial woes, markets from Asia to Europe are doing their utmost to prevent Monday from turning from dark to black.
For that reason, I cannot manage your billions, Masayoshi-san.
That day, he realized his greatness didn't come from his strategies.
2008, Lehman Brothers, the fourth largest investment bank.
It came from his ability to tune out the noise and his discipline to develop his own understanding of the market. BNF stuck to his guns. Instead of doubting himself and his own experience, BNF doubled down on his trading strategy. As the position continued to move against him throughout the morning, BNF went on a buying spree. BNF started taking diversified positions in a lot of the hardest hit companies that formed the Nikkei. His overall position size grew to $64.8 million with positions in over 90 companies, while the Nikkei had fallen below $7,000. After the Tokyo Exchange lunch close, the game changed. A couple of the top names had begun to rally, slowly bringing the Nikkei back up. As the Nikkei climbed, the positive chain reaction started spilling over to more of BNF's positions before the market closed. Having faith in his understanding of the markets, BNF decided to hold his position overnight. The next morning, the market continued to rally, and that's when BNF decided to start to unload his position. His trade gave him a profit of over $12 million. BNF had regained his godlike status.
12 million in profit, baby.
He was once again a god amongst Japanese traders. In the last few years, BNF had diversified his portfolio. He bought 2 commercial real estate buildings. Commercial properties tend to have longer-term tenants, and it offers great tax cut incentives. Real estate is typically a great place to benefit from during an increase in inflation. He sold one of his properties, but he seemed to stick to his main focus, trading. With no signs of changing his lifestyle and his godlike growth, BNF is on a mission to become the world's first billionaire bear bedroom day trader.
There you go. That's BNF right there. BNF. Homies with CIS, right? Yeah. Okay, just making sure. Yeah, they were homies. You find out later what's going on, and I'll start it. If you want to do this again, let me know. We'll do it next weekend, of course, when I don't have much to do, as much. And we'll start with this one. I'll start it again, and we'll watch this one again because it ties into these other ones. Obviously, you can go watch them yourself if you don't want to wait. But I'll be watching them next week if you guys want to do this again. And it will be the other 2. There's 2 more here. So it's about 45 minutes left. 45 minutes left of videos. And then on this weekend, obviously tomorrow, I'll be doing the daily update, weekly update and prediction, going over last week and then giving you guys this week's predictions. But I chose these because they have like key information. They are really valuable information and they're really inspirational. So like it has a total package. So I figured you guys would want to see these. And they're not typical like the Big Short, margin call, stuff like that. These were stuff that I found really unique. And I've watched a lot of different trading documentaries and stuff like that, but I found these ones really unique and inspirational and educational all in one package. So I was like, yo, I got to share these with everybody. Like everyone has to see these. So I wanted to share them with you guys. So that was 3 of them so far. Let me know if you guys want to do this again. Let me know. Let me know down in the comments and everywhere else. Press and like, all that good stuff. You know how it is. That way we get that sweet, sweet algorithm love. Bitcoin's price currently right now at $43,787. Ethereum currently at $2,347. Get ready for the 2024 crypto bull run. It's going to be insane. Already in the bear market doing 100% gains, guys. In the bear market, 100% gains. That is how we rock, baby. Bitcoin is going to do some wild things, guys. 100% gains in the bear market. Just think about it. Just think about it, guys. Yeah, 1 equals do it again. 1 in the chat equals do it again. 1 in the chat equals do it again. That's right. Drop a 1 in the chat if you want me to do this again. Maybe we can get back on some Call of Duty streams too. I've been having some fire games, man. I don't know. It's up to you guys. It's all up to you guys. It's really up to you guys. I just don't want to do anything like that's just too many people are against. I always want to do what I want to do, obviously. Look, they start messing with Weeble and everything starts messing up and freezing. But yeah, I don't want to do something that too many people are against. Always want to do what I want, but again, it's up to you guys. So let me know. Drop a 1 in the chat if you want me to do this again. But guys, I'm out. I'm about to go get some food and chill. Hopefully you guys have a great rest of your weekend. Hopefully I see you tomorrow for the weekly update and prediction. And hopefully I see you next week for some more trading. As always, y'all, have fun, stay safe, make money. Those are the key things. Peace out, man. I appreciate you guys for being here. I really do. I appreciate you guys for being here. Hopefully you have a good weekend. And hopefully I see you for some more action. Much love, all you guys. Stay safe.